compared with last year went up 164%. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys alternative perspective and local insights about investing in Asian stocks as well as in personal finance. Today I want to talk about, is it time to buy Xiaomi now? The stock price has risen 50% in the past 1.5 months only. Oh, by the way, before going to Xiaomi, look at ATMX, Alibaba, Tencent, Meituan and Xiaomi. I have a playlist covering them. You can see the link here or in the description below. So in the middle of March, the stock price was as low as 20 Hong Kong dollars per share. And now, at the beginning of June, is already 30 Hong Kong dollars. It means that it rise 50% within 1.5 months. In fact, as recently as in May, the lowest price was $24, which means that even you bought in May, the profit could be up to 25%. So what are the reasons behind the rallies? The first trigger was that the court's decision in Washington, D.C. to remove Xiaomi from the blacklist of the US government, because US government labeled Xiaomi as one of the China military affiliated company and forbids any US citizens or permanent residents from investing in anything to do with Xiaomi. So why does it matter? Because Xiaomi can now be included in important indexes like the FTSE China 50, which in turn means that index funds, no matter ETFs or mutual funds, have to include Xiaomi in their portfolios if the indexes that they're chasing include Xiaomi. On the other hand, many mutual funds would also need to buy Xiaomi because the indexes they're chasing also include Xiaomi, and they don't want to fall behind with their benchmarks. The second trigger was that literally good results. In Q1 2021, the revenue went up 55%, and the sales of smartphones up 70% to almost 50 million cell phones just in one quarter. More importantly is that the profit margins was a staggering 18.4%, which is a record high. So Xiaomi is not only growing, it's also making more profits per unit, which is very important. The adjusted net profit compared with last year went up 164%, up to 6.1 billion RMB just in one quarter. Almost all the investment banks raised the target price for Xiaomi after quarterly results. This includes all the big guns like Morgan Stanley, JP Morgan, UBS, Credit Suisse. Well, they all increased the investment rating as well. The only exception is perhaps Nomura, which put it as a neutral rating. But still, they raised the target price from 27 Hong Kong dollars to $31, which is quite impressive. As for Q2, CITIC Securities is forecasting that the sales will be 50 million cell phones, and it will be a 50% increase compared with Q2 last year. They also raised their forecast of the profits by 50% for this year, and they raised the forecast for the profit next year up 12%, which is pretty good. So it looks pretty good last quarter and the coming quarter. So by the way, I just made 100% by selling half of my holdings in the stock that I've recommended a few days ago. If you want to know it, check out the link above. But more importantly, you should subscribe now. Even better, clicking the bell button next to the subscribe button so that you are not going to miss out my videos. If we look beyond the current quarter and last quarter, there are also interesting news. For example, Xiaomi's CEO for China and International wrote on Weibo, which is kind of the equivalent of Twitter in China, saying that they expect that the shortage of chips would be solved by the first half next year, which is of course good news for them as well. Furthermore, Lei Jun, the founder of Xiaomi, announced that they're going to build the second AI factory, due to complete in 2023. This factory is going to produce 10 million high-end cell phones every single year, which is the most profitable sector for Xiaomi, and is going to create 50 to 60 billion RMB worth of cell phones every single year. A word of caution as usual, of course, there's always a risk. You cannot expect only upside potential but no downside potential at all. unless you are talking about SPAC, which you can check out my videos about SPAC in the link above and in the description below. So the risk for this, first of all, has risen 50% in the past 2 months. So it's not a surprise that there may be some corrections. The second point is that even Wall Street Journal challenged the sustainability of the continuous growth of Xiaomi's stock price. There are 2 reasons as well. The first reason was that the basis was very low in 2020. In Q1 2020, it was the peak of the pandemic in China. And of course, it's much easier to grow from a low basis. The second point is that the growth is also largely attributed to the downfall of Huawei. Huawei's market share dropped from 20% in Q1 2020 to only 4% in Q1 2021. And during the same period of time, Xiaomi's global market share went up from 10% to 14%. So you can see that there's a large degree attributed to the demise of Huawei. Therefore, we need to be realistic. It's very likely that there will be some corrections in the coming days after it has risen for 50% in the past 3 weeks. However, I personally still would bet that it would challenge its peak at $36 or even beyond. Therefore, I'm going to wait a little bit if it goes down a little bit and then I buy it. But even if you buy it now and it goes to $36, the former peak, you can make almost 20% of profits. So are you going to buy Xiaomi now, or you're going to think a little bit and wait a little bit? Leave me in the comments below. If you like the video, remember to like it, share it, and subscribe. Even better if you click the bell button next to the subscribe button. It would be great encouragement for me to continue making better videos for you guys.